Hi, everyone. This is Natalie Pace. It's June 3rd, 2021. This is our June free teleconference, video conference, and we have so much to cover. So there's a recent study that shows, millennials have been really driving the real estate market. And sadly, 2/3 of them have buyer's remorse. So this is something we have to dive into. Prices are high in real estate, stocks. The feds have started to sell bonds. Crypto has had a bit of a correction and 42% down from the highs. And so we want to know what's going on in all these markets. AMC is back to shoot the moon status. So what's going to happen with all of this? Let's discuss it and dive into the data. I'll be starting in just a moment. Okay, so let's jump right in and start with housing. So there are many things going on in housing. One thing is that housing prices have gone bonkers. Now, it's interesting because they've increased 19% year over year. They're hitting all-time highs, but it's a little bit different than you might realize. So what's happening is that we're seeing a shift towards multi-generational housing. So people are buying bigger houses, and because bigger houses cost more money, then that is skewing the average price of the home higher than it would normally be. So the actual amount of housing that's available in smaller homes, there's not that much available. And people are saying, hey, I work from home, so I need an extra best bedroom for my office, or I need an office. And they're saying, well, I'm thinking about a big home. I wonder if I should just move my parents in and then they can help pay for the mortgage. Or I wonder if I should move my kids in. So let me show you some statistics just so that you understand why the jump is where it is. So here's what's going on. Just 1 second here. So existing home sales actually declined in April, but as you can see, the median existing home sales price rose an astonishing 19.1% year over year to a record high of 341,600. But again, as I said, a lot of this is due to bigger homes being purchased. So here's the multi-generation. This is an old chart, by the way. So we were already seeing a trend towards intergenerational, multi-generational housing before this year. This was already happening, in 2020. It was even starting to happen even before the pandemic. During the pandemic, it just absolutely skyrocketed. And since then, I guess people have gotten more accustomed to the idea and they're purchasing homes with this intention. So it may be that those are the homes that are available, or it may be that millennials have an easier time purchasing a home if they purchase multi-generational and get their parents on board. Millennials are driving this increase in sales. They really want to own a home. They're tired of not owning a home. They had to delay it for 7 years because of the amount of student loan debt. We'll talk about that in a minute again. But here's another sad statistic. 2/3 of millennials are having buyer's remorse after the purchase. So let's take a look at that. Go back to this page. So this is due to, some of it's due to costs that are they weren't expecting. Some of them, the mortgage is higher than they were expecting. Also, some of them feel like they overpaid or that it's not a good investment. Honestly, when you buy high, it's very tricky and it's very risky, because even if you can afford it, if the markets drop and you bought high, your credit score goes in the toilet because your assets to debt ratio goes down, and that's 1/3 of your credit score. So it's really important to always apply, the 3-ingredient recipe for cooking up profits for real estate purchases. Do you know the area really? And also, I would add, that your home should be your sanctuary, and every soul has their own geography. So you should really know the area. You should make sure that you've actually looked into even climate change issues, but certainly you want to know your neighbors and that you're a good match with them. Secondly, you want to pick the leader and then you want to buy low. In almost every market right now, people are buying high. Although, of course, if moving out of expensive cities and into other markets is cheaper. But even those markets are high relative to their median price or where they were even, a few years ago. So if you were thinking about buying a house, or if you have a millennial that's dying to buy a house, because people do get into these frenzies, everybody else is doing it, their friends are doing it, they're going to buy a house, they're going to have kids. So just, be the voice of reason. And here's an important voice of reason. It's the chief economist of the National Association of Realtors. You can watch my interview with him at my YouTube channel. You can just go to youtube.com/Natalie Pace. You can also read the blog. I think I have it right here, if I'm not mistaken. And this is his Lawrence Yune's words. So he's saying, look, if you're a seller, then now's a great time to be selling. But don't expect for the market to stay this hot for very much longer. In fact, by autumn, he's saying that, we're going to have a lot more inventory because the forbearance and the eviction moratorium are ending, the construction has increased, and the vaccine has meant that people are okay with showing their homes. So when you have more inventory, then the prices can go down. When you have a small amount of inventory, that's when the prices go up and go crazy. So if you're thinking of selling your home, I would say also it's not a given that you should just do this, because having a home could actually be a very good placeholder for your money. If you sell it and you put it into cash and then you just buy stocks or crypto and then that crashes, you could lose more money than you could lose in your home. So if your home is something that either one, you can really afford and you love it, or two, it can actually be income producing for you, remember that hard assets might hold their value better in the current environment, a high debt environment, a lot of paper money floating around. So a hard asset, especially one that can be monetized, especially one that can produce income. So it's not as easy as real estate's high, just sell it. And it's definitely not as easy as I want to buy a house, I better buy it right now. If you are interested in housing, we do spend a full day on what's safe, and that does include real estate at our retreats. At minimum, read the real estate sections of the ABCs of Money. By the way, I'm going to update this. I'm going to spend August in a writer's kind of sanctuary in Rome. And I will be updating it so that it'll be, 2021 looking forward. It's still really relevant. The last time I updated it was October of 2020. So I would definitely read the real estate section of the ABCs of Money at minimum. Consider coming to a retreat, of course, as well, because the sooner that you get the ABCs of Money that we all should have received in high school, the faster your life transforms. So the next retreat is actually starting tomorrow. If you're interested in that, just click on that. You better get registered right away, obviously. And the reason it's a good idea to go to that one is you aren't going to have an opportunity to attend another retreat until fall. So it's a better idea to start your planning now and get your ducks in a row now, make sure that your stocks are good. And we are going to talk about stocks in just a moment. And then also, if you are interested in the ABCs of Money, be sure that you get the 4th edition. So go to nataliepace.com and click on that book cover and it'll take you over. As you can see, it's going to cost you a big $4 to order this. And we'd love your review. Also, of course, you can get the ABCs of Money for college. If you are a parent of a toddler, you should be getting that. And the Gratitude Game is a 21-day program to help you implement the ABCs of Money. So let's jump over now out of housing into cryptocurrency. In general, crypto's down. So from the highs, it's up on the year, but down from the highs. So Bitcoin's down about 41.2%. Ethereum is down about 36%. So let's take a quick look at Coinbase where you can take a look at some of these assets. Think it's right there. Okay, so here's Bitcoin. It's at 39,000. The high was 64,899, and that's down 41%. Now, we can also look at Ethereum. We can look at a few of the other, coins out there. Now, what happened to Bitcoin? Well, first of all, the high was in April, so it was before Elon Musk did that infamous tweet, and I believe I have it pulled up. Here's his tweet. He was talking about how Tesla is not going to accept Bitcoin. So it was accepting Bitcoin. This happened on May 12th. But the high for Bitcoin was before that. The all-time high for Bitcoin, if we go back and we put up it's about right there, and it was about April 13th. So it was before the tweet. But of course, after the tweet, things got very weak. So here's about May. That's about right about the time of Elon's tweet. It was at 56,000. So it's clearly down significantly since then. So what's the big concern? Well, energy usage. And he's right. The energy usage for Bitcoin and Ethereum is extremely high. So if you are environmentally conscious, you do have to take that into consideration. So what's happening now is that some of the lower energy usage coins are becoming more popular. I'll talk about them in just a moment. But I think it's important for you to realize that this is absolutely a trader's platform at this point. You can't have currency that's worth 65,000 and then 38,000 and at the beginning of the year was under 10,000. That's not a currency. That is, in the words of Elon, a hustle. Now, will it become a currency? It's very likely that crypto is going to be part of our way of purchasing things going forward. Which coin will it be? We don't know. We really don't know. At this point, what it really serves as is people that are losing faith with the dollar are becoming more interested in crypto, especially the younger generation. People that lose faith in the dollar that are boomers or even Gen X, they're a little more interested in gold and silver. But millennials and Gen Z are more interested in crypto. And just like the meme stocks like AMC and GameStop, they just, want to get rich. So they think it's a life hack to invest in crypto and it's just going to shoot the moon. Now, we know that this has sobered up a lot of crypto investors, having a 41% correction. And that is a correction. A 10% drop is a correction. So that's a correction. The question is, should you be buying it at this price? Could it go lower? And the answer is it's a trading platform right now. So it's shooting the moon when it goes on, Reddit, Wall Street Bet site, and everybody says, let's buy, buy, buy. And then when it kind of loses favor and people forget to talk about it, it goes down because a lot of the big players are the ones that sell it. So let's take a look at some of the other coins that are lower energy usage. And again, all of this is a trader's delight. We haven't yet found which one is going to be the winner yet. Dogecoin started out as a joke. It's now going to be accepted. You can now trade it on Coinbase. Cardano is a lower energy that's beginning to get more popular. Full disclosure, I own it. And also Polygon, the symbol Matic, is another one that's lower energy based. Both ADA, which is Cardano, and Polygon, which is Matic, both of these are based off of the Ethereum platform. So, but they are lower energy. So they're using a different way of verifying, who's doing what, and it is a lower energy form. So, but again, remember, this is it's really important for you to think of this as a hot slice and don't bet the farm on it. Also, if you're going to do a hot slice, it's important to remember how important rebalancing is. So if you had bought Bitcoin at the beginning of the year and your one hot slice is 10 slices, it's begging you to sell high and trim it back to one slice. So that leads me, we did have a question sent in, and someone had asked me about Bitcoin Cash. So earlier, before Elon went and pointed out the extreme energy usage, and I knew about it, and I had just honestly, it wasn't top of mind when I started talking about Bitcoin. So Bitcoin Cash has done extremely well. And this is for you, Deborah. So the person that had asked me about crypto before, originally, I was saying, and we were talking about it in the retreats, we've been talking about it since late 2020. And I was saying, look, Bitcoin is already shooting the moon. And it's, at the time, it was already going, very close to it was just hitting more and more all-time highs, but it was really high. Whereas Bitcoin Cash, which is a hard fork off of Bitcoin, so it's the same platform, but they just decided they wanted to create more Bitcoin, so they did a hard fork. Bitcoin Cash, there's also Bitcoin SB. That one was nowhere near its all-time high. So when I had discussed Bitcoin Cash with this person, it was trading pretty low. When I first was interested in it, first began discussing it, it was under $400. It was, yeah, actually, it was under $300. So here's Bitcoin Cash. It's now at 714. So when I had the conversation with this person, it was trading probably closer to around 500. So they're still up. But here's another thing that's really important is that it actually went all the way to 1600. And so if that person had purchased it at 500, they would have tripled their money. So couple of lessons here. Again, is that A, it's a hot slice. B, it's a trader's platform. C, you have to watch it. And if it triples and your one slice has become three, take your profits, because the volatility means taking profits early and often it's an important part of it. So this is a trader's platform. This is not yet a currency. It's important for you to keep that in mind. All right, I want to talk a little bit about college loan debt, because we've had about $123 billion in missed payments. 37% of individuals have missed their student loan payment, and that is over 40%. That's going to impact banks. And we will see that in the bank's earnings, and it's going to be even more important in some of the banks that are heavily, their business model is student loan debt, like SLM. So if we look at their revenue, you can see that their revenue is down. So they're taking a hit by the students not paying it. But yet, isn't that interesting? Their revenue is down, but their stock is high. So it's more than recovered. So it's interesting, because that's one of the things that we're seeing, is that things are not necessarily making sense today in stocks. So here we have AMC. It's back to shoot. Actually, it shot the moon yesterday, and it's had a big sell-off. They're going to do an issuance so they can grab some of that money instead of it just being the traders getting it. But this is a company that, if you go to look at their credit score, they're they're at the lowest rung of junk bond status. They were almost bankrupt in January. Their revenue imploded. They were down like over 90% in revenue. I think that a lot of them were trying to sell popcorn to make a little bit of money. So, I understand. I think it's really important that you understand that we don't know what the motive is behind some of the people that are talking about AMC and GameStop. There are people that are making a lot of money on other people's naivete. So be very careful, because these stocks, they shoot the moon one day, and then the next day they could be down significantly. So AMC is down significantly today. Yesterday it was up over about 67. The high was 72. And when you look at the year, you end up seeing, like when it shoots the moon, then it drops. Now here it shot the moon again. And is it going to stay there? There's just not the fundamentals behind it at this point. And by the way, even before the pandemic, this is really high priced. Even before the pandemic, there just wasn't as much revenue. They were already losing revenue because there was so much of a shift to online platforms. So be careful with the meme stocks. And if your company that you like happens to be a meme stock, then it's a good idea to try to use a limit order to help yourself. So, for instance, Tilray is on the move. And as we see, and Tilray is going to start looking even better because it merged with Afria. So the earnings are going to start looking better too. And this is one that hit an all time high of 67. So you can see there in the 52-week range that 67 was its high. It probably was there for a couple of hours. So the only way that you're going to get that is with a limit order. So think about that. That is something we talk about at the retreats as well. The other thing is, what happens to send the cannabis? Well, the next big event is going to be when the Senate adds cannabis decriminalization to its agenda. They've already said they're going to do it soon. So that may be why we're starting to see an uptick with Tilray already. I want to remind you that I did name my company of the year. So I just told you that AMC, the revenue was down 85%. The couldn't be more different than our company of the year, Moderna, whose revenue is up in the tens of thousands. I think, let's see if we can get it exactly here. So the revenue growth for Moderna was 23,000%. And basically, last year the revenue was under 1 billion. This year the revenue is expected to be over 19 billion. That's a massive increase. And you might say, oh, well, Moderna is trading at all-time high. And it is. But here's the interesting thing is that, so there you can see it's trading at an all-time high. But if we look at the forward price earnings ratio, so the price to earnings ratio based on where the earnings are supposed to be this year, it's 7. The average price to earnings ratio is 16, so this is very low. The current average right now is about 35. So most stocks are very pricey, but Moderna does not have the growth built into the price yet. So I still think it's a pretty good deal. I mean, certainly I'd rather see you buy it when I first mentioned it because it has had a bit of a rally. But it's, it still could do very, very well. Biotechs in general, by the way, volatility. If all of a sudden we start seeing blood clots or any of the other issues that Johnson & Johnson or AstraZeneca had, then it could affect Moderna's cells. Okay, one last thing a couple of things I want to point out to you. So we are expected to have a gangbuster year in GDP growth in the US, 6.4%. The only country that's supposed to perform better than that is China at about 8.5%. But largely it's built already into real estate and stock prices. And we do have a number of events that are coming up that are actually negative for stocks. So I've taken off that overweight 20%. So you can act your age if you're doing my sample pie charts. But it's up to you. Because if you're worried about the debt ceiling crisis, the amount of debt we're accruing, the Fed's selling the bond program that they bought up all those bonds, the fact that 50% of our company S&P 500 is at or near junk bond status, if you're worried about these things, then you should overweight a little bit safe. That's your protection. You don't just say, I'm going to sell all my stocks. Although I would definitely be underweighting my bonds. So you should really know what you own on the safe side too. Be diversified on the at-risk side, act your age, consider overweighting anywhere from 0 to 20% safe so that if the markets do go down, that you are protected. But you want to have some game on because 6.4% GDP growth is the best we have seen in decades. It's amazing. It's a recovery from last year. It's built into the prices. So I did want to show you just a couple of things real quickly. So the first one is, there we go. So this is the IMF's real GDP for the world. And again, the US is at 6.4, Canada 5, Chile 6.2, Peru 8.5, and China 8.4. So I guess Peru is supposed to be the best in the world. So you can see that most of the world is going to have a recovery, a real decent one, except for Myanmar. No, going to have a recession this year. And that's the cost of war. The other thing I wanted to show you is from the Federal Reserve Board. So they are going to start selling all those bonds that they purchased. And if I can find the program real quickly, I'll pull it up here for you. So this is the program that they purchased. They had over what is that? Well, it's over 1,000. It looks like it's 1,226 bonds that they purchased. In terms of the ETFs, you can see that they purchased JNK and HYG. So they were purchasing a lot of junk bond ETFs to help the market. And basically what they did is they've issued a notice that they're going to start selling all of these. So that could be, that means that these corporations that have been borrowing too much money are going to have to actually borrow from the marketplace. So what we saw in March of 2020 was that bonds became very illiquid, and then the Federal Reserve started buying them up, and so they got a little more liquid. But we could start seeing a little more illiquidity as they start selling. So if you own bonds or bond funds, you need to really understand what's safe. And again, it's so important that we are spending one full day on this at the retreat. So the next retreat is June 4th, starts tomorrow. You better get registered right away if you want to join us. And I'm going to go ahead and stop there. Just real quickly, a couple ways that you can join me on social media to make sure that you're staying up to date. So I do post daily on social media. I don't send emails daily because I don't want to inundate you. But you can see my Twitter feed, and oftentimes it's going to give you a link over. So as an example, if you missed this video conference, you can click on that link to watch it back. You can scroll down to see, oh, is there maybe even an article that I might have missed that I want to get in on? So a lot of times there's an article, the 12 steps to successful investing. So again, you don't have to be signed up on Twitter in order to access my Twitter feed and link to the various things that might be of interest to you. Also, though, you can follow me, just follow me on Facebook, Twitter, Instagram, YouTube. All of these links are right there on the homepage at nataliepace.com. One other thing I want to just remind you guys is that when you do receive an email from us, it's a no reply email. So if it's a mass email, it's no reply. Be sure that you are emailing info@nataliepace.com, or you can call us at 310-430-2397. I hope to see you in my retreat tomorrow, and if not tomorrow, in October, although I would not wait. Oh, I do think we need to do one more thing before I let you go. So if I click over to the calendar here, you can see that we are going to have a lot of things happening over the summer. So the Federal Reserve Board may start selling their bonds. Our debt ceiling ends July 31st. So we have to raise the debt ceiling before August 1st. Now, with Democrats controlling both the House and the Senate, that will happen. But it won't happen without the Republicans pointing out just how much debt we have, which is over 28 trillion the last time I looked. So you can ask us for our asset bubble chart. You can actually look at last month or the month before that because I keep showing you the asset bubble chart. But the basic bottom line is we live in a debt world. And when there's too much debt flowing around and interest rates are at zero, that means we have a lot of credit risk and we have a lot of interest rate risk. That really affects the bonds, but it can also affect stocks. So the last time that we had this debt ceiling crisis, and also we have a negative outlook on our AAA rating from Fitch. Now, the 6.4% GDP growth does help us, but if they do decide to downgrade us, and they might, I've talked to a lot of economists and they all say, well, they might, but they'll downgrade everybody too. If they do decide to downgrade us, it usually happens over the summer because they're hoping that you're going to be on vacation. You won't pay much attention to it. So the last time that the US was downgraded was August 5th of 2011. That's when gold hit its all-time high and stocks did weaken. So just be aware of that. Like if you want to purchase Moderna and you think, well, maybe the debt ceiling, or if we get a credit downgrade, I'll have it on my stock shopping list. You can do that. Or you don't have to do all or nothing. You could say, oh, maybe I'll buy a little bit now. And then if for some reason it goes down, I'll buy more later. So that can help you as well. All right, so things to be thinking about. I am going to stop here. I'll open up the phone lines or the mutes so that you guys can have conversation or ask questions if you want. It will be a lightning round because I have to prepare for our retreat tomorrow, so I'm not going to spend too much time answering questions today. You can always email us questions as well. Sometimes we already have the answers in a blog or teleconference or video conference. And other times we might use it for a blog or to answer it in a video conference. All right, I'll stop it here. Okay, so we got a really good question that came in, and someone said, do I set limit orders for all of my stocks? And the truth is, I do. And the reason, but different types of limit orders. So obviously this is a quick lightning round answer, but I'd use it to help me with my rebalancing. So let's say a nest egg strategy, my small, medium, large value growth. Those are things that if they're in a fund are not necessarily expected to shoot the moon. They're not shoot the moon performers like some like Tilray might be, or even some of the crypto. So for the limit orders on those, let's say, for instance, if it's a slice and if it got a 60% gain, it would now be, one slice plus a 60% slice. Then I might set a limit order that would sell that 60% gain. So again, it's going to be high. I'm going to say, okay, if it goes to 60%, I'll sell off the excess. Now, if it's a hot, like for instance, cryptocurrency, and I see that my Bitcoin Cash is shot up and done, tripled or quadrupled, then I might go ahead and just sell it. I might sell all of it because quadrupling is amazing. Or I might just say, okay, I'm going to sell off 3 slices and trim it back to 1. So on crypto, you might have to babysit it a lot more. On shoot the moons, obviously on Tilray, it could, if it gets added and decriminalized in the US, it could go even well above its all-time high of 67. So just be careful of that because, again, they shoot the moon and it hits that point. It might only stay there a very, very short period of time and then drop. So having a limit sell order can be helpful in capturing that. But if you said 67 and it went up to 670, you'd be pretty upset if you sold all of it at that one. So it's up to you whether or not you want to watch it or set half of it or whatever. But one thing I can tell you is be sure that you're rebalancing. And if you own individual companies or super hot performers, then the limit orders can help. But I set them so high that it's like, shoot the moon status high. All right, I hope that's helpful.